Well, to tell us more about what's been making headlines in finance and economic news this week, we're talking with Suzanne Haddan, Managing Director at BFG Financial Services. Very warm welcome to you, Suzanne.
Good morning.
Thanks for coming in. What's your overview of what's been happening in the last week here?
Well, we had good market results. We had our market up about 0.3%, US markets up about 1.5%, and that was basically on the back of two main factors. First one was a bit of softening in the rhetoric around the trade wars between China and the US. And secondly, the European Central Bank has actually dropped rates from minus 0.4 to, believe it, minus 0.5 of 1%. Plus, they're going to flood the market each month with about 32 billion of buying back bonds. And let me tell you, Trump was not happy, Jan.
It's interesting with the trade tensions, actually. That's no doubt going to have a huge impact on the economy, because we've seen it have a really negative impact, these tensions rising. But now that it seems like talks are happening, then it's surely a good sign.
Well, we sort of grab at the straws, don't we? The markets are looking for anything positive, and we would be rather optimistic to say that discussion's done and dusted. Whether everybody's just taking a chill pill when the Chinese will be celebrating their 70th anniversary for the Republic of China, well, that's probably the case.
So, Suzanne, let's talk about property, shall we? Is the housing market out of the slump?
Well, it certainly had a bit of a recovery recently, and that's on the back of the election, with none of the changes coming through for capital gains tax, and also the Reserve Bank dropping rates. Interest rates has sort of given people a bit of confidence to move back in. Whether it's short-lived or long-lived, we will have to wait and see, but I think we still have to have a lot of caution around how much we borrow. Just because a bank will lend you the money doesn't mean you should actually take it.
There's been a lot of talk about the housing market probably having reached its low point, and now it's heading back up. So are a lot of people seeing that as an opportunity to jump in?
Well, we've certainly seen first home buyers continue to come into the market. They were up about 1.5%, 1.4% for July. And the worrying trend with that is there also has been a bit of an increase in people, first home buyers, borrowing more than 80% of the purchase price of the borrowing of the home. And what that means is you get caught with mortgage insurance, which can be on a $500,000 loan, $10,000 or more.
Yeah, it's quite expensive.
Well, it makes it seriously expensive, and it's hard to save a deposit, so you can understand why people need to borrow more.
Do you envisage the government having to intervene in any way?
Well, interestingly, Lorna, the government is intervening in that they've tabled some new legislation which they advised in the election to support people buying their first home with a deposit. If it passes, it'll start in January 20, and it means they'll guarantee, if you can afford to repay the loan, that's important, but only have a save deposit of 5%, they'll guarantee the difference between the 5% and the 20%.
Wow.
And what does that mean? You don't have to take out that horrendous mortgage insurance. But it's only for about 10,000 loans. So in the total scheme of things, when we're talking about 400,000 loans, it's probably not huge, but every little bit helps, doesn't it?
Is this, I guess, trying to keep the Australian dream alive? We had this week the Australian Institute of Health and Welfare, the 2019 report, saying that each generation is less and less likely to own their own home.
Yes.
So are we trying to keep the Australian dream alive when actually it's just changing, and maybe we should adapt to that?
Well, I think that it's important for security of the individual to have your own home, particularly by retirement, because most of our retirement structure is predicated on you owning your own home. But worryingly, even the age groups 50 to 54, their home ownership percentage has dropped from 80% to 74%. So you're seeing this subtle drop. There's massive drops with younger people, sort of the under 30. They're down 17% from people 40 years older. So the trend is extremely worrying, and anything the government can do to support people getting their own home, I think, is a positive.
Okay. We want to talk as well about lending and the changes.
Well, one of the things that ASIC has got some new powers to intervene in products that would harm you. And one of the dangerous products is what we call payday lenders. And they lend small amounts to the most vulnerable. And some of these lenders were charging unbelievably 1,000% in fees and defaults and administration by setting up different company structures. And the ASIC has used the first time this intervention to ban those products because they're often Indigenous remote communities that they sell them to, and there's other things those people need to be educated to do. The first is, if they're on Centrelink, maybe getting an advance on their pay. The second is you can get an interest-free loan up to $1,500 for necessities if you're very poor and low income earners, and negotiating with those you owe a debt to is important as well.
Just quickly before we go, there was hope that people would do their tax and spend their tax return and inject it right back into the economy. Are we seeing people do that?
Well, notwithstanding the government is desperate for them to do it, indications suggest that maybe up to 50% won't spend any or all of it. And I have to be, I don't want to be a hypocrite. If you ask me, I would be saying don't spend it as an individual. But for the economy, let's get out there and support our retailers.
Good news. Okay, fine. Suzanne, if you insist, I go shopping. Thanks for coming in this morning. Good to see you.
My pleasure.